Welcome to another episode of Tank Talks, your personal think tank for all things startups and venture capital. I'm your host, Matt Cohen, founder and managing partner at Ripple Ventures. This week's episode is a conversation I had on Clubhouse with Rob Petrozzo, co-founder and chief product officer at Rally Rd. Rally is a platform where investors can buy and sell equity shares in collectible assets like cars, watches, and sports memorabilia for just a few dollars. On today's talk, we discuss Rob's views on democratizing investing in rare collectibles like art, cars, and also the recent rush into NFTs. Rob explains how he and his buddies initially came up with the idea for Rally and how they navigated the regulatory environment to get going with their first classic car collectible, and then subsequently went on to raise over $27 million. We discuss why he thinks illiquid assets like collectibles are a viable investment and how the Rally community has played a pivotal role in the tremendous growth the company has seen over the past year. Finally, we asked Rob about the recent rush into NFTs like NBA Top Shot and his plans at Rally to enter the arena with their own sports partnerships later this year. This was an incredible conversation with a true visionary who is trying to build the next Robin Hood for investing in collectibles. Now let's get into this week's chat with Rob Petrozzo from Rally Rd. Thanks for joining us in the tank today, Rob.
Thank you for having me. Sincerely appreciate it.
So like I said, on today's show, we're talking about the democratizing of investing in rare collectibles like art, cars, and also the recent rush into NFTs. So when people ponder the investment opportunities around collectibles, they probably think about, things like wine auctions, sales of very expensive old cars or baseball cards, or maybe a pocket watch that made an unlikely appearance on like an antique TV show, hoping that their piece of treasure might one day be worth millions. But never has anyone really suggested taking an equity stake in an object that you might not own outright until you and your friends started Rally Rd. So can you tell us how Rally got its start in 2017 with its initial focus on classic cars?
It starts way before 2017, but the real time it started was Chris and I and our third co-founder, Max, were putting ideas on paper in 2014 into 2015. And I think 2015 in particular was this really crazy time. I think that when you look at history in the future and you look back on 2015, that's going to become a really important moment in tech adoption. And this is what I would consider at that moment was kind of peak Instagram. It was the start of group chats for everybody where it became this must-have part of a conversation. Robinhood officially launched. And then this really important part of the story of 2015 was that Bitcoin was just starting to get some really serious footing with retail investors. So before that, it was kind of just insiders and very specific tech groups who knew what it was. But 2015 was this start of a crazy bull market and a bunch of volatility. And then you had, Dow 20,000 to start the year too. So this was this time where my co-founder, Chris and I were talking a lot about what we thought the future would look like for a while. And we both kind of had other jobs at the time, but we both been talking about working together on something for a while. We went to high school together in Brooklyn, but he was a little bit older than me. He was way, way smarter than me. I was kind of the creative kid. We were the only two friends of ours in our group that went into tech and that really thought about the future the same way. So in 2015 was the peak of that. We kind of met together one day. It was in the Ace Hotel lobby, actually. So this is February 2015. And we've been talking a bunch. And he said, I think I got it. Like we were talking about what the future would look like. And he kind of hit on this moment. There were all these huge auction results. And you kind of touched on it too for the antiques and for car auctions. 2014, 2015, that was all over TV. It was headlines all over the place in the news. And there was this start of this willingness to invest in these new asset classes on new platforms as opposed to just legacy platforms. And now the information that was once available only to like the small group of people with serious connections was becoming way more accessible. The last piece of that was democracy to the real sort of, assets that mattered the most that were in those auction headlines. And then we had this perfect storm with the way regulation was starting to change and Reg A Plus, which is what we use to take these assets public, was available now. All these kind of pieces hit together. And we realized like now was the right time from a understanding from a consumer perspective, but also from a regulatory perspective to do something that made accessing these alternative assets really possible.
So you went from like an idea at the Ace Hotel to actually getting people the ability to buy fractional equity shares in a, pretty illiquid asset. I mean, that must have taken a lot of work. How long did it take from that idea to actually getting your first transaction going? And what was it?
The whole thing was, it felt like it took, a month. It wound up taking around 18 months. So we were, even though Reg A Plus was something that was starting to get adopted in a few places and crowdfunding, I kind of kicked the door down on that. The way that people understood investing alternative assets was still something that was kind of new. So we looked at it as we needed two pieces. One was that alternative assets were going to be looked at as a real place to put money. And then B, that Rally could be kind of that trusted resource for someone to come in and make that first investment. So we started with cars because, again, in 2015, that was like the big sort of auction results and a lot of the big events the community was building around it. It was something that Chris loved and we had a lot of domain expertise in. It was also something that it's tough to explain that a 3,000 pound piece of metal that everybody is taught from, the moment that they understand, what a car is, that you're going to lose money on it. And that's not the case with every car. That's the case with a lot of the ones off the lot. But we started building it out in that conversation in 2015, knowing that if we could do it right with cars and we could pick the right cars that had the right story, we could do it with a lot of other asset classes. So the first thing that we started with was a $70,000 Lotus Esprit from 1977. It's a super esoteric kind of inside baseball type of car, but it's one that the design roots of that car are something that still get used today in vehicle design and in fashion. It's these really hard kind of angles. It's also what Elon Musk used as the basis for what became Tesla. So it had all these kind of relevant points. It was a beautiful car. It was something that was kind of relatively undervalued if you look at the other supercars from that era. So it hit on all the points and it hit on the thesis of democratization for us. So that became the first asset. We passed that through the SEC in 2016. We wound up running the offering in late 2017. So all in, it was around 18 months from the product design, the first build, the approval from the SEC, and then running that offering in November of 2017.
Oh, wow. So that's almost 2 years. I mean, you went from classic car collectibles now to a much wider audience like wines and sports memorabilia, comic books. Can you explain how your team manages the actual assets in regards to like insurance and safe storage so the audience understands how it actually works?
Yeah, so this is like the kind of behind the curtain type of thing, but it's also something that we've been able to really to formalize, especially and add a lot of efficiencies too, which is a big part of our business over the course of the last, call it, year and a half, 2 years especially. But basically, we never jump into an asset class. Like we never just go straight in without paying attention to it for an extended period. So now with about a dozen individual asset classes and almost 6 years from that initial concept to now, we've been able to really understand the dynamics of each asset class, and they all kind of have shared DNA, even the ones that don't seem like it. So, we did a dinosaur for the first time 2 months ago, around a month and a half ago, something like that. But we also do like Michael Jordan rookie cards, and those are very different, but the way we source and secure each asset is the same. So we always work with groups or individuals with serious and significant domain expertise. Then whenever possible, we bring them in-house to work with us exclusively. So before anything ever goes public, we have every item authenticated by third-party experts. We have, best-in-class insurance policy against forgery or defective title, anything that is put in place to sort of ensure that our investors are protected. And then we maintain the majority of the collection in secure, purpose-built facilities. And then as we expand our experiential footprint, which started in Soho with our first museum space on Lafayette Street, the opportunity to bring more of these assets to life and put them in front of our investors grows, and we'll start putting that in more places as well.
Yeah, so it sounds like you really take out all the non-market risk by doing all the like analysis and background checks and stuff to make sure it is in the rightful owner's hands. And from what I read online, there's a sourcing fee that's paid to Rally, roughly around 7% for like the acquisition cost, which is less than the industry standard, I understand. But how do you guys actually, make money on the work that you're doing before anybody actually comes in with their dollars to buy a stake in it?
We have right now, one of the main sources of revenue is that sourcing fee, which for us, again, is generally around 7%. And that's part of the item's acquisition costs. Again, that's probably less than half of that industry standard premium that's charged by auction houses or by dealers or a lot of those private sales. But, we're able to do this at scale right now. So a lot of what we've been able to do in formalizing this business and pioneering some of these pathways that we've done on the product side, we did the same thing on the regulatory side too. So to be able to operate at scale, and instead of sort of submitting one or two assets as we go through sort of these offering circulars to get them qualified by the SEC, we're able to do 30 and 40 at a time. And as we've grown and as we sort of developed that relationship, we do it really efficiently too. So what might cost a regular person, who goes and buys a classic car, thousands of dollars a year on the maintenance, on the storage, on the facility they keep it in, or, insuring a $1 million Michael Jordan car, we're able to do all of that at serious scale at this point, and without having to have that need to pass on any of that to investors or to our users. So a lot of it comes with the ability for us to scale quickly, but also to formalize what we've done to this point and find these awesome assets and bring these incredible people around us without having to sort of pay an arm and a leg at retail. And then the goal for us has always been democratization. So the more we can do that, shrink down the costs, we take a little bit of a piece during that IPO process, But for us, we're able to sort of do all of that at scale and do it all really efficiently. So we don't have to ever pass on commissions or management fees or any of those sort of minimum investments in any shares or any assets to any of our users.
Yeah, so it sounds like you take out like all of the grunt work, right, to make sure everything's ready for that IPO. Can you explain how that IPO actually happens? Because I think it only happens around like once a month or something. How does it actually happen for someone to buy?
We run IPOs every day at this point, basically. So the way the whole process works is that once that approval happens from the SEC, it kind of goes into the app. Every individual asset has its own share price, its own total value. It fills with its own investors when we open that IPO, which typically happens around noon on weekdays. They happen pretty quickly. So once that IPO closes, it goes into a lockup period for 90 days. After 90 days, we open up a secondary market, which is all run through registered broker dealers and allows you to sort of place asks if you own shares, place bids if you want to buy shares, and then transacts in kind of like an auction model where at the end of the day, we print one price that gets the most bids and the most asks into one transaction.
Wow, that's amazing. I mean, it sounds like this should have been around for a while, but it was such an elite club, these like collectors clubs. But what I read online is that your average investor is around 27 years old, which is quite young to be investing in rare collectibles. So, what do you think the biggest reason so many young people have joined this often elite and unattainable community is?
I think they've gotten really, really savvy. I'm an old man now, but when I was 27, which it wasn't that long ago, but it's long enough ago for me to remember being 27 and not understanding a lot about options or derivatives or anything outside of what was put right in front of me or what was on CNBC. But so much has happened. So now we have these, 18 and 19-year-olds who know everything about all these asset classes, and they come in with a really well-formed investment thesis. And that, to me, speaks to the access to information and access to experts and to the people who you want to hear from about the assets you want to hear from. They're just way more accessible now than they've ever been. So, when we were starting this business, we were trying to prove those two things, that alternative assets were real and that Rally was the right place to go if you wanted access. What we found is that when we first launched, we did our first activation at the Javits Center for the New York Auto Show. And we brought a 1969 Mustang, and we put it in the middle of the whole showroom. We had a ton of traffic, just people coming to see it and hang out and ask questions about the platform. What we found is that we would have 14 and 15-year-old kids come up to us. They knew every single thing about this car. And it wasn't from school. It was from YouTube, and it was from Twitter, and it was from conversations with friends. So that asymmetry of information has changed so dramatically over the last half decade even, but really the last decade or so, where being able to understand what an asset is, what the investment looks like, what the comparable values are, who has it, what's important about it, all of that is part of the day-to-day for so many of these kids right now. So to say we have a 27-year-old as the average investor, to me, I'm surprised it's not younger, because there's so much access to this really interesting information about the things you really care about. So all we really did was allow people to kind of put their money where their mouth was and put some money to work in the things they knew best.
Yeah, I love that. I mean, democratizing access to these big ticket items that, customers would never traditionally have access to is amazing for the little guys. I mean, they probably know more about these cars than they do of any other public stocks out there. And that's amazing that you have provided that avenue for them to get it. But maybe let's talk about the returns. What kind of returns have investors seen over the last few years through Rally that makes this a viable investment class?
There's a lot of different factors. I'll say it like that. That first 1977 Lotus that we ran, which again is a pretty esoteric car, that's up around 70% over the last couple of years. If you look at asset categories over the last year, for example, you have a lot of disparity too. And even within those assets, so you have watches, which are up around 5% as a bucket, but you have some that are up 30 or 40% relative to the market. Then you have something like sports and gaming collectibles, which as a whole over the last year are up closer to 30%. But with hundreds of assets trading and exits, you have outliers to either side. And we always try and track relevance and make sure the most relevant assets are on Rally as well. So, something like Pokemon cards, which anybody who was around in 1999 or 2000 knows how much those got used and how much of a sort of social phenomenon it was. And it kind of still is. They've had this incredible moment this year. So our first edition set from 1999, which is a PSA 10, the highest possible grade, that IPO'd at 125,000. So over 3 trading periods, that settled at around 600,000. And then our most recent exit was a soccer card, was a 1958 Pele rookie card, which got bought off our platform for 106% net return over 58 days. So those happen, but it's also something where we're always trying to find something that's going to last for the long term. So when we source any asset, we're never looking at it as a quick flip, but we're never looking at it as here's what's relevant in this exact moment right now. It has to have relevance now, and we have to predict that there will be relevance in the future because we are into this for the long haul, and we want our investors to be in it for the long haul with us as well.
Yeah. So explain to me how that liquidity event happens. I buy into equity onto that Pele card and I'm owning those, shares, those units. And then all of a sudden, can those be taken away from me, obviously at a higher price? How do you determine when to liquidate those assets? Or is it just on the consignment from the owner?
So when we take possession of that asset, whether it's on consignment or it's shared equity or whether we buy it, we'll have sort of all the dynamics listed around it. We'll make sure, during the regular trading periods, it trades, and we don't really get involved at that point. That's when it's true peer-to-peer. But what's happened is that we've established this huge collection of incredible assets. And Fitz and Rory, who are in the crowd right now, and the team that we have working on that's one of our core competencies at this point. And it's such a specific part of our business because we always want to find the best possible asset. So what we've put together is basically a museum quality collection on Rally. And a lot of it is one of one. So we have things like the controller from the moon mission that Buzz Aldrin actually used to navigate the spacecraft. And we have, again, like dinosaurs and these very specific one of one cards and these cards that you'll never see again. So what we put together now is a place that if you want access to those best possible assets, whether it's from a share perspective or you want to own it outright, we've created a really efficient process for you to do that. So every asset on Rally is essentially always for sale if you want to buy the whole thing. What we've seen more often than not over the last year and a half, especially with 10 or 11 exits to this point, is that somebody that really wants something comes in, makes an offer at a premium. We bring that to our investors. So it's almost like they want to do kind of like a hostile takeover to a certain degree. They want to buy up all the shares from everybody. But we'll bring that to our investors. We poll them. They'll vote yes, no on the sale price and what the net return is. If the answer is a majority yes, that goes to our advisory board who approves the sale. And then we get that done, usually within 5 or 6 days, start to finish, once the offer is qualified. So that's been a big part of, I think, the way this platform is built, is that we've built a real museum. And if you want to buy from that museum, you can talk to our shareholders and do that.
Wow, that's amazing. So it's like a majority, 50.1%, can basically vote to get a transaction approved.
Yeah.
And everyone else just gets dragged along.
So what we've done is that, again, we're always trying to establish a museum quality collection. So you have people that will be vocal about their no and their reasoning behind it. But there are also situations like, this Pele card, which was it was a 75% yes buyout. But it's hard to, at least for me, maybe I'm a little bit older, I don't know, it's hard to look at 106% return over less than 2 months and say the outcome is bad. But again, it's something where we don't want to influence vote. We want to influence conversation. We want to be in a situation where it's a conversation and we're building community. So we always sort of communicate the best we can with those investors, especially if they say no, or they feel like there's a piece that's missing from the conversation. We've tried really hard as a platform. I think this is kind of what sets us apart too, to be as transparent as possible about what the processes are and what we're doing as a business. We're trying to sort of establish things for the long term. We want to put great assets on the platform. We want them to trade actively and to have volume, get people excited about it. At the same time, at the end of the day, this is a finance app, and we want to make sure that it's our fiduciary responsibility to show returns to those investors in certain cases where we have the opportunity. So when we see that, we put it on the table, we let people make that decision. And then if, everything checks out, we make sure they get paid as quickly as possible on it as well.
So you're like trying to be the Robin Hood for the democratization piece, but you're also not trying to have people actively trading because you believe in the long-term value of these assets. And you think that that should be something people also see when buying these shares, because they don't have a say on when they could sell if somebody comes in to buy it, right? They're kind of joining with everyone together.
Yeah, so it's one of those things where, we maintain the proxy vote on that only because it's really hard to run a real proxy with 1,000 investors on a $100,000 market cap item. But we want them to know that we're always acting in their best behalf, especially during that IPO process, during the curation process, during that sourcing process. Anything that comes out of that, that's a potential gain. We want to put that in front of them and make it as easy as possible to give us that yes or no with their opinion on it and let them know what the process is to get them out. You know what I mean?
Yeah, that makes sense. That seems fair too. You've signed some pretty cool partnerships with firms like Topps for sports cards and obviously Porsche because they're an investor as well. What other partnerships have you formed recently that you can disclose that you're really excited about? And what are your plans for these?
And I personally have gotten to meet some incredible people and that have some incredible opportunities. We have that all the time inbound, especially right now. There are so many people that share our mission at this point. I think that when it was with Topps or whether it was with, Snapchat was one that we did last year, or, some of these other people that are in the network right now and what we're doing with Porsche, everyone realizes how unavoidable this future is, this democratization, and whether that's the big legacy brands that have $1 trillion under management, or it's some of the people that are closer to the ground and really understand what this world is, but want access to the same user base. Any brand or person or institution who shares that mission and wants to present some really unique collectibles or really unique opportunities to their fans and our community, which more often than not are one and the same, is somebody that we want to work with and that we do work with. So the ink isn't dry in a couple of these deals yet, but within the next couple of weeks, we'll start making some announcements. And I think it's very much in the same vein of what people expect from a platform like ours.
You just mentioned your user base is 200,000 and growing. I'm sure your transactions have grown over, 200% in the last 12 months. And you've stated that sports memorabilia has been the most successful category as well. So how has the incredible rise of NBA Top Shots affected your ability to attract new investors? And I'm sure you're speaking to a lot of these sports organizations who are interested in jumping on the bandwagon of NBA Top Shots as well.
It's such a phenomenon what's happened. And that team is just, Rohan, that team and everybody over there, they're so keyed in on what this is and what the future looks like. And I think so many people don't realize that that's the same team from CryptoKitties, and they've been in this in a way where this isn't the flash in the pan. It's just the first product release they've done. I think that what we've seen, I think a lot of people look at it where they go, has that affected your business? And they think about it as a negative. And to me, it's a huge opposite. It's the complete polar opposite of that. I think that people too often think about one thing and they see the different version and think people kind of have to choose. But what we're seeing people do, whether it's in crypto or even in equities now, what's been happening with this rise of the retail investor, they're choosing, our users are choosing. I think the same thing with Top Shots users are choosing between standard investments and new categories, and specifically these categories that they love and that they really care about. And sports are one of those unavoidable passion points for so many people. Top Shot is a part of the same new category that we've been paving ground on for the better part of half a decade. So what we saw with CryptoKitties, what they were doing early on, I think it's the same way that the Dapper team and everyone at Top Shot, they saw what we were doing when we partnered with Snap last year and added AR lenses to the assets. Like, it's all part of this same, A, find things people are passionate about, B, give them real access to and let them put their money up and sort of make the investment, and C, build a community around it. I think that they're doing really, really well with community in a way that I think part of what we do is present best opportunity, and getting too involved is something that from a regulatory perspective, we never really want to sort of, seem like we're giving too much opinion or being a part of that, because we want to just lay out the best opportunities. But that's something they're doing really, really well that we're looking forward to doing more of in the next few months as well.
So when you say looking forward to, are you saying that Rally has plans to enter into the digital collectibles space with your own branded digital collectibles, or you just don't want to say it right now?
It's, again, this isn't a trend. This is here to stay. There's trend elements to it. I think that when you look at what's happening in the NFT space, it's hard for me to look at like a Rob Gronkowski and say, yeah, he should have a token. Like that to me is a little bit, again, no shade to anybody, but there are going to be cash grabs in this, and it's something brand new. And we don't ever want to just jump on a trend. And whether that was tangible assets or NFTs or anything we go into, we're always thinking about what the future looks like, again, now, the near future, and years from now. We're always thinking about what the consumer behavior is going to look like and what these precipitous rise in any of these sort of, token-based assets or any of these new digital collectibles coming out, what that's going to look like in the event that there is a rug pull or something happens that affects that marketplace. So right now, we're putting plans together for a lot of different things. To say NFTs aren't part of that roadmap, I'd be lying. But we've been thinking about it a bunch, and we want to make sure that, anything we go into, we have that significant domain expertise, that it meets all of our underwriting standards, which are way, way stricter than I think a lot of people realize, and that we're best positioned to build a community around it. So this is one that checks a lot of the boxes. It's one that we've been paying attention to. We've got so many great people around us who've been doing it so well, even before this new wave kind of started in January of everybody jumping on it. And we're going to continue kind of watching it and planning strategically what we would do that would be able to serve our community best if we were to go into NFTs.
I like that approach. And I think, what you talk about with community, obviously being at the core of what you guys are trying to build, but also authenticity and like risk to ownership and things like that. It just is not existing in the NFT space. As much as people want to say, in my opinion, that they own the rights to these digital collectibles, there are so many ways to replicate a digital collectible offline and online. Someone can just take a screenshot and then reproduce those t-shirts and no one will know exactly. But with your assets, I don't see that happening unless someone's making fake ones that are getting through your compliance team.
Yeah, I mean,
right?
It's weird because it's like it's so hard to avoid NFT conversation right now, right? And it's great because it opens up so many different sort of lanes to have those conversations. But we always, whether it was tangible assets or intangible assets, we always start with a really wide aperture and we start to sort of, nail down what it's going to look like. Even the name, like Rally Road as a name, everyone thought that was a car name in the beginning, but realistically it was about rallying people together. And it was like the other Wall Street was kind of how we always thought about it. So we started really wide and then we shrunk into cars to start. But every conversation in 2016 and 2017 felt like this now too. It was all about ICOs and why don't you tokenize? And for us, we always looked at that as it's a solution, but it's not one that we have a problem we're trying to solve for right now. We're trying to make something that was trustworthy, that worked with, the right people and was qualified by the SEC and had this tangibility to it. I think that it's been talked about a lot, but what Top Shot did that was genius is that they don't have the word NFT or the acronym NFT anywhere on their homepage. Like you go there and it's just digital collectibles. That's what people understand. That's what they get. That's why they broke through. So now it's this breakthrough moment. And it's human nature to over-index the things that you see the most and say entire spaces are a hit or everything's going to be a classic. There's going to be massive winners out of that. To me, Top Shot is 100% one of those winners. I think there's a lot of people that have been doing this before this craze and before the cash grab started that are going to come out on top because they built real, authentic communities. And that's what we're interested in right now.
Yeah, absolutely. I mean, Roham's a partner of our fund and we're co-investors and on the board of one of the companies that spun out of Axiom Zen. So I know him personally, and he definitely is very authentic and true to what he is building and definitely not looking at that cash grab like some other people are in the space. So I completely agree with you there. You have raised $27 million to date and you've received investments, as I mentioned, from some strategic and financial investors like Porsche and the Raptor Group, which is founded by Jim Pallotta, co-owner and chairman of the Italian football club AS Roma, as well as co-owner of the Boston Celtics, and also Alex from Reddit. So can you tell us about what your experience has been like working with these amazing investors and how it's sort of helped accelerate the rise of Rally?
We've been really lucky. I think a lot of people sort of look at investors and they it's a check. And I think that, it's fuel. A lot of people get that confused that money that you raise is your money and it's your turn to spend it for sure. But there's a return that comes with that everyone's expecting. And I think that we've been able to sort of do really well in finding these people who really understand this mission. They know that we were building a brand new category. It was going to take way more time than just that quick flip. They understood that the payback was going to be had very big potential outcomes, but at the same time, it was going to take a lot of work to get there. So when we first built out the cap table that we have right now, it was 2016, 2017, our first round. We never really did a true friends and family round. We tried to find people who had that significant domain expertise in the financial space. So one of the first investors who came in was Howard Linsden and Social Leverage, who, one of the earliest investors in Robinhood, and really helped us understand what we were doing. And we had the founders of Acorns, Jeff Cruttenden, and we had the founders of Betterment, Eli Broverman, a lot of people who really had navigated a lot of the spaces that we were about to go into. So that was the first check mark. And those are people that are still friends that we still talk to all the time. And they're still part of this organization, this process in a real way. And then when it was time to sort of raise the next round, it was more about, building out the people that we knew understood consumer. So our last round was led by or 2 rounds ago was led by Upfront. And it was led by, we brought in Wonderco and we brought in Nas and people that really understood consumer. Because for us, this was something that shouldn't feel or act that different than GOAT if you're buying sneakers or any of these investing apps that are really sort of trying to democratize what we're doing, but make it feel more like a transaction in a regular consumer space. So now our most recent round is about building community. So when you think about community, to me, like Alexis has been a part of this app for a long time. He's been a user and he's been somebody who's had great feedback. Bringing him in was a huge thing for us because it was somebody who's been so close to the platform for so long without being an investor. And then Porsche, for us, again, in terms of the way they think about the future, they think about community the same way we do, where they've had this premium product for a really long time. But at the same time, they're smart enough to realize that the future is 21 and 22-year-olds who know them from YouTube or from a movie right now and don't necessarily know Porsche as the heritage brand that my generation does. So that for us is like what's always been really important is lining up investors who understand the mission and they're squarely rooted in the same conversations that we're in about what the future looks like. They've all been incredibly accessible. They've all been people who have great product feedback, who have always understood that, the mission that we're on, they're on with us as well, but they kind of give us the leeway to build that from the ground up and they give their feedback along the way without having to be too sort of intrusive on the process.
Wow, that's incredible. Sounds like a powerhouse of investors to surround yourself with for such a game-changing company. And definitely know Howard Linsden. He was a co-investor in another company we were a part of as well. Welcome, Andrew, to the stage. You've got a question here for Rob. Go ahead.
My question is about like the liquidity of the market. Like when are we going to hit a place where there's enough volume of buyers and sellers coming together in a certain moment where we're not We're not really waiting for
Yeah, it's the right
trading
question. I
windows.
mean, it's coming soon. So I could say this, that what we've built at this point, we had a couple of data points that spoke to what the scale would have to be to get to the end goal, which is always going to be, closer to a continuous market, closer to something that people recognize as true peer-to-peer. The way we set it up to this point is that we're confident that stretching out a little bit of what we have and doing something where you potentially consolidate the amount of hours in a day and stretch it out over days and just put more assets into the queue to trade on secondary markets a little bit quicker is going to be the first pathway to get there. But we're building out a ton of product features right now. Obviously, we're in a very regulated environment too. So just jumping in is not something we ever want to do. But I can say that we're getting very, very close. It's been a huge focus of the business of making sure that we're building out a really world-class secondary product. The IPOs have been the anchor to this point. The amount of users that we have has grown so dramatically, and we have so much sort of, as you've probably seen, like so much demand on that IPO process. We feel like we're very, very close to sort of being able to open that up with more days, more liquidity, and much more trading for the assets that are in that lockup right now, potentially bringing them straight to the marketplace as a direct listing at some point soon as well. So it's coming. I know it's something that we owe to a lot of our users right now to sort of make that more transparent about what that process looks like. And we're going to be releasing a lot of information over the course of the next month and a half on the next iteration of the secondary market.
Thanks for the question, Andrew. Joe, you got a question?
Yeah, how you doing? Thanks for having me up. I actually have two questions. Rob, this is an awesome opportunity. I've been a big fan of your platform, and it's amazing to see the growth that you guys have experienced and the way that you've branched out. So two questions. They're not related, but one was, obviously the topic tonight was NFTs, but that kind of got skirted. Sounds like it's just a little early, and I appreciated your answer about, you didn't want to invest in anything that's a flash in the pan. Totally get that. Just curious if there was any other digital asset classes that you have been looking at, because I know that there's been a lot of discussion here on Clubhouse of other asset classes, such as, for example, domain names are constantly brought up in various rooms that I'm a member of. And then the second question is, I'm curious on the crowdfunding side, because I put a lot of interest in investigating, figuring out what the mechanics of a crowdfunding platform are. And the common question that seems to get brought up constantly is the Howey test and what constitutes a security and what doesn't. And I'm just curious on the back end, do you guys run everything through a broker dealer, or is there only certain things that you sell on your website that have to go through a broker dealer and others?
Yeah, those are good questions. They're actually connected too. So I'll say this, that we're definitely going into intangible assets. We've talked about domain names and influencer economy type stuff where you have Instagram accounts. There's so many different elements to that. That's a definite yes for us. And it's something, again, that we've been working on the background for a while. We've been sort of, we always want to make sure that we have ample access to the best possible assets well before we take anything public or before we open up a new category or asset class. And we're incredibly close to having intangible assets on Rally. That's the most I can say about that, other than to say that you're spot on. And even NFTs is not something that's off the table at all. It's something that when we first started having conversation around digital asset classes, we were talking to people like Justin Blau, who I think has done really, really well of merging music and experience as part of what he's working on with the NFTs. And we, talk to Roham all the time about what they're doing at Top Shot and how that could potentially work on Rally. But that leads to the second point, which is when, the Howey test for anybody who doesn't know, it's basically a short form version of saying, is this a security that should be registered, or is it something that is a utility that doesn't need to register as a security? An asset that you're allowed to sort of IPO, and the way we do it, everything is always looked at as a security. And the way that we've structured all of our assets and all of the asset classes is as sort of independent mini public companies, each one. So it all goes through that process of being registered through Reg A+, which again was leveraged originally from crowdfunding and allows for non-accredited investors to invest in a lot of these different asset classes. That's what it's going to be for the future, for the foreseeable future, I should say. But all these asset classes, even if it's a building that has cash flow because there's a rent roll, or if it's, any type of music rights or any type of sort of domain name that potentially has sort of a lease value, all those pieces are factored in. And we've got this system now that's flexible enough that allows us to put all those risk factors in one place, all the potential for ongoing revenue in another place, all the descriptions that go along with them. What we do now, like to sort of take it behind the curtain a little bit, it's not that different to take a domain name public as it was for us to do the first car that we ever did. It's all in this very specific template, and it's part of this very specific relationship that we have with the SEC right now. But it's really not that different. So we found this system that works really well for us and also protects us and investors in a way that we're comfortable with. So that's what it looks like for the foreseeable future. I think that's part of the reason that we don't just take NFTs and throw them on the platform right now, is that a lot of those aren't set up the same way. So when you start doing that cross-pollination and cross-platform with it, you get into this murky water that we try and stay away from to protect us and protect the investors.
Awesome, man. Super, super thorough answer. I appreciate
No, I
it.
appreciate it, man. It was a good question too, because that's like, it's hard for me to say when someone's like, just throw a bunch of NFTs on the platform. We were having those conversations in 2016 where ICOs started going crazy, and it's like, don't do a round, just do a token and raise 40 million. And that was something that people were really taking seriously. And we couldn't not have the conversation internally and with our lawyers. But at the end of the day, you start realizing there's short-term cash grab type gains, and then there's the long-term, what you're building to make sure it's in those confines of what's going to work for your investors, for the powers that be, for your company, for everybody. And we landed on this, and it's been really, really effective for us to this point.
No, great answers, Rob. Thanks for the question, Joe. I guess I should ask Rob, like, what are your thoughts on Christie's and the legacy auction houses getting into this space? Do you think they actually have motivation here in terms of reaching out to much broader communities, even your age group of users, or do you think they're just doing a cash grab?
It's weird because we talk to all these auction houses and we've been close with a lot of them, and I think a lot of them are starting to see the future. That's a big piece of it. I also think it's just unavoidable. I came from music. That's where when I got out of school, I was working in music for a while. And back then in 2006, 2007, being with a major label was like the biggest thing. And I was an art major in college. And like with art, if you want to get into fine art, having the right representation, being in the right gallery, that makes or breaks your career. Now it's shifted so dramatically. And it took a long time for everyone to realize it. But now we're at a point that, like, if you're a musician, if you're an artist of any type, and you're independent right now, that's like the coolest thing you could possibly be. And to be able to make money and not give cuts to 25 people and not have a gallery or an auction house run your career is the goal of any artist. So there's like the CJ Henrys of the world and some of these really incredible artists who are self-managed and they get to sort of work on their own schedule, but also make a serious amount of money doing it without having to go through the construct. So I think auction houses have realized how the world is changing, and they're just dipping their toes in right now. I don't think anybody thought that Beeple NFT was going to go for $69 million. Anyone tells you that is lying to you. They did not see that coming. I think that's sometimes things like that happen. It forces everyone to take it very seriously, very quickly. So I think for the auction houses, that was probably a tipping point that's going to dramatically change the way things look in auction houses for the next 5 years at least.
Yeah, we'll see. I think they're jumping on the bandwagon trying to catch up with the community. But
I would agree with you. I would agree with you on that. But it's one of those things you can't avoid.
You're a little too polite there, Rob. I hear you. Before we wrap things up, Rob, we always love to ask our guests for any of their favorite book recommendations, whether work related or personal, anything you're in love with these days.
Yeah, man, I wish I read more. That's one thing. Like now I'm trying to do like a book a month right now, which is trying to get back into a habit of knocking more out. But I've actually said this before, and I'll say it this time too. There's a book by David Halpern called Inside the Nudge Unit, which is something that to me, I feel like every designer, every technologist, or anybody starting a new business should read. So it's all these true stories about this behavioral science unit inside the UK government that was called the Nudge Unit. Their goal was to sort of passively convince people to do things that would benefit like public works and healthcare or reduce crime in this way that was kind of like a win for everybody, but without those people realizing it. So it's almost like a set of case studies of real things that happened from this small, scrappy kind of startup group and the way they were able to sort of influence good behavior, which is something I think that we need way more of inside of tech and in finance. It's happy to see that so many companies are coming out right now with that social cause front of mind, and we're trying to pay more attention to it as well.
Fair enough. I won't put you on the spot, but I kind of want to. So who's your favorite collectible you guys have? Your favorite child? Is it the Mike Trout rookie card?
You said it as a child, so it's like I don't have kids, but I can only imagine that like my dad can't pick between me and my sister. So it's hard for me to say. I love all of them equally. There are a couple that are I have. This is not investment advice at all, but that are close to my heart. One is there's a Jaguar XJ220 on our platform, which is like this European supercar that I feel like never got enough attention when I was younger. But I had the scale model. Like the first time I spent my own money, I think it was like $25. I was like 12 or 13. I'd saved a bunch of money, and I went to this hobby shop on 13th Avenue in Brooklyn and bought it and put it together. And that was like my pride and joy. It felt like it was this $1 million thing sitting in my childhood bedroom. And when we got the real one, it was like a very emotional moment for me. It was kind of that full circle thing. So I would say our Jaguar XJ220 is my favorite asset on the platform.
Oh, that's amazing. Came full circle from your time as a kid.
That's all it is, man. Nostalgia is important.
Exactly. Yeah, for sure. Well, thank you so much for joining us in the tank today, Rob. Really appreciate you digging into democratizing, investing in rare collectibles, and the discussions around NFTs and everything you're doing at Rally Rd. So thanks again for joining us today.
No, likewise. Thank you. Really appreciate it. Great conversation.
Thanks for listening. As always, if you enjoyed this episode, please leave a review on Apple, Spotify, or wherever you listen to your podcast. And make sure to give me a follow on Twitter or Clubhouse if you want to be in the audience and ask a question on our next Tank Talk. Till next time.